All right. Good morning, everybody. Today is Wednesday, January 7th, 2015. This is your Trader's Way Forex trading strategy session. My name is Wayne McDonald, Chief FX currency strategist, here to help you. All right. Please type into the chat room what currency pairs you want me to cover, what commodities, what markets, whatever. I encourage questions. I want this to be interactive. So far, we got requests for Euro USD, oil, Euro pound, USD yen, pound dollar, Aussie dollar, some news scalping. Well, we're going to have a busy day then. Let's get the show on the road. Okay, I need to remind you that currency trading is risky and not appropriate for everyone. I use generally accepted trading techniques like technical and fundamental analysis that has been developed by market participants over centuries of trading. I myself have been trading for well over 10 years. My past performance does not predict future results. So always stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So far, big news today, Eurozone, guess what? Still no inflation. High unemployment, low inflation. The European, like the CPI numbers out of Europe are just dismal, right? So that tends to weaken the currency because the central banking policy of that economy will need to stimulate it by lowering interest rates and devaluing the currency. So therefore, the value of the currency diminishes, right? So if you're short Euro USD, congratulations. Because the central bank in the United States is in the opposite situation. We're wondering when they're going to raise interest rates. And wow, Europe has got a ton of problems. What else? We got ADP today. It's sort of like non-farm payrolls mini. Historically, it has no correlation, so I always say that ADP stands for another dumb prediction. But you know what? The good thing about the ADP report is it's very scalpable. It moves. The market pops, and you'll get an opportunity. Did you guys see the scalp opportunity yesterday? You know what it was? The dairy report. And it moved the Kiwi like 50 pips in a heartbeat. It came all the way back, but that's what a scalp is. Very interesting. You guys trade the dairy report, comes out on Tuesdays. Kiwi dollar, just boom. It's great. Now, the trend has been way down for months. But we've had a couple of good ones in a row, so that's seems to be stabilizing things. Keep your eyes on the Kiwi dollar. Okay, let's start with gold, oil, etc., etc. Here we are. Let's zip this out to, I don't know, what, a 15-minute chart. Okay, what do you think? Do gold traders use pivot points? This is a weekly reversal pivot point. On Monday, it would have been here. If you were a bull, the aggressive target is in this zone. That's why I have it means stop, right? Red means down. Once you get up here, the forces are going to be working down. So anyways, we get all the way up there, and it stopped. Very nice, right? So look to use the moving averages. Normally when you hit the moving average, it should go in the direction of the prevailing trend, right? You notice how we've had our pullback? People tried to go long, and it's failed. So I call this a step down. We probably are going to come down, hit the 55 EMA. 55 EMA indicates that on this time frame, the trend is up, but it is weakening dramatically. And therefore, you're going to be vulnerable to a double top. So if we come back down here, we're not there yet, but if we are, then I would look for a double top or a lower high, and then probably work our way down to the 200 EMA, which is a support zone off of this area. Okay? Look, if we back out even farther, you'll see that this area here used to be a resistance zone. All right, so maybe we get caught in shear on gold while we wait for the stock market to get its game together, right? So even if you're bullish, you should be cautious in here because there's a lot of resistance, okay? You know, and at the very least, something like that. Okay? So that's gold. Let's flip over to oil. Let's go, 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 go. WTI, West Texas crude. There's the scalp for, or not the scalp, the from before. Right? Nice little drop. 2 Fibonacci retracement. Okay, that one's not drawn correctly. Let's do it again. Okay, 382 Fibonacci retracement. Guess what? Right into the first fib. How? Right? 382 to 132. Now, if you use Fibonacci retracements, 1382 generally predicts a 1618, and that gives us a 43 and a half. What? Can you imagine that? That we're on our way to 43 and a half based on Fibonacci theory, retracement extension. Wow. It's not that far from 45, which is kind of like a psych level. There's a lot going on in there, isn't there? Let's zoom in a little bit. Looks like we got to find a top on the right here, or on the left. All right, that looks like a top. Because there's a couple of things. Notice the price action. Okay. Lower low. So what do? You take the previous low. Let me change my drawing tool here. No, need that. Let's make this. I'll make that red. Hang on, just getting a drawing tool here. Make it red. All right. So once you get a lower low, and I'm just looking at like this move. As soon as you get the previous low broken, what I tend to do based on price action is I take low, I mark it up, and I actually, on my MT4 platform, will draw a rectangle. Okay? So what used to be support should be, or may be, resistance in the future. What was support in the past could be resistance in the future. So that's my sell zone. Okay? Makes a lower low. I would mark that, and I would look at this area. And you can see there was a little micro one in there, right? Right? This one. Just a little one. Down. Do it again. Take that low. Mark it up. Okay? Makes a low. Right? Lower than that low. Mark it up. No, I'm not drawing this very quickly, but whatever. Okay? Then what? Makes a lower low, so mark it up. Take the low, drag it over. Okay, this one's not, but it's close, right? Makes another low, mark it up. Take that low, drag it across. There's a short there, right? Notice this one. See, that's the problem with this one is it's a role reversal the other way, isn't it? So now it makes another low here. But you see how it broke back above? So a bear would have expected this, right? Pull back here, you would have shorted, fine. It breaks, you would have marked that up as red, right? And you would have been looking to shorten here, correct? So this is the shields up red alert part where a bull is looking to do this. Okay? You see the change of direction or change of trend on this time frame, which is a 50-minute chart. It's at least less bearish than it was based on price action. So if you're a bear now, what I would do to look for a new short would be to fib off the top. There's the Monday open. And this is the other fib. This is the old fib extension. So what we're looking at here is the 3A2, 50%, 618 Fibonacci retracement. If you're a bear, I would look to sell in that zone, which would be about an hour or a 4-hour fractal. I'd mark it up like this. Then I'd look for key pivot points. Key pivot points being, let's see, I only have dailies on this one, right? Yeah, all right, it's only a daily. Yeah, I would look for like weekly pivot points in here to see. I don't have it on this chart. But what else? Psychological levels. You notice how that 50 is right in the middle there? Not only a 50%, but a $50, which is about here. So my general plan would be, if I'm a bear, kind of let this cycle up, insert like a 3-wave correction if you do Elliott, right? And then maybe it does that. Somewhere in the red zone on a smaller time frame, maybe you get a reversal pattern and you put a short in there. If you're not a short, if you're a bull, then you already got your trade plan because you got your lower low followed by a higher high, by a higher low. You should be longing. That's a very simple one reversal pattern. Okay. Let's move on. Take a look at the S&P 500 very quickly. What a mess that is, huh? You think it's stabilizing? Well, let's find our support. So this is how I like to do it. I like to draw with rectangles. Oh, let's do that again. Insert, shapes, insert, shape, rectangle. Thank you. Okay, I look at both these things as supportive. I go over here and I say, oh yeah. Okay, normally I'd like to see the oscillator roll over. So it shows that we could be here a little while and then maybe work our way up. What are the events today for the stock market, for the commodity market, for the currency markets, for the fixed income markets, right? FICC. If you work in a bank as a trader, there isn't like a Forex department. You work in the FICC, fixed income commodity currency trader. All right. So what are the big events now? ADP in, what, half hour? ADP, and then what this afternoon, FOMC, right? So one or both of these could be a nice little catalyst to continue mission. Okay, if we get lower than that, we got some serious problems. That to me looks like, I don't know, I'm eyeballing it. What is that, a 786? Yeah. Anything lower than a 786 is a reversal, not a retracement. And the one thing with the stock market, you should always remember this, more market participants in the stock market make money when it goes up than when it goes down. Okay, so it's going to want to go up. This goes down, well, we'll deal with that later. But here's the thing, don't talk yourself into something. If it hasn't reversed, then it hasn't reversed. If the stock market is 786 retracement, oh wow, that's a really big retracement. But it hasn't reversed. So don't bet against the trend is my basic outlook for trading. The trend is your friend until it betrays you, right? And then you have to kill it. Hey, you want to do some currencies? Start with Euro USD. All right, what's going on here? We made it through this this cluster area. Remember our last session? We talked about how this was a pivot cluster of weekly and monthly pivot points. Look how long it stood there, and look up and down it is. Very, very dangerous if you didn't know. Okay, if you didn't know the cluster was there, you're probably wondering, right, what's going on. But look at this, like boom, oh, back into the pivot. Retest, back to the other pivot, and then back to this pivot, and then back to that pivot. So how do you trade this? Okay, the way that I like to range trade, you know, my personal opinion on this is you identify support, you identify resistance. All of that is really clear. You don't even need pivots. Yeah, there's a pivot here, and yeah, there's a pivot here, and yeah, there's a pivot here. Well, that's why prices stop, but that's why we use it, right? Hedge funds and high frequency traders that use algorithms for trading, they program pivot points in them. It's not complicated, right? So they're using them, but how do you trade the range? You wait for the break, right? If it broke to the upside, I'd look for the break, the retracement, and gone. 1, 2, 3, right? And here, look what it did. It broke, retraced, gone. Now, in a higher fractal, you might want to even do the same thing, okay? Because if you were trading this on, okay, this is a 15-minute chart. If you were trading this, let's say on a 4-hour chart, you haven't gotten your retracement yet, right? Because you wouldn't have seen this. This would have been, it would have been within one candle, right? So on a higher fractal now, you're probably looking to short here. A retest of the 18.5, let's say. 18.5-ish, somewhere between 1850 and 1875. That's where the two pivots are. So you would, you know, again, we don't know if it's going to flip or where it's going to flip. So we have to look at probabilities. Okay. This pivot could act as resistance. This pivot react as resistance. We have a psych level at 50, which is about here. Oops. Yeah. About there. And then what else is going on? This used to be support. That used to be support. So, you know, what would your logic be when you document in your trade journal? Because I know you document all your trades in your trade journal, right? That you say it's a 4-hour fractal breakout strategy using weekly S2 as resistance after the break, monthly, whatever that monthly is, I can't quite see it now that I've marked it up, but a monthly pivot as resistance, right? Psych level as resistance, roll reversal as resistance, right? The old price action, so on and so forth. I mean, you got a lot going on there, right? Most ideally, we get this stochastics a little more elevated and then you continue mission. On a breakout retracement, it's a trend. So your oscillators are going to play less importance because trend oscillators are made for consolidating markets, not trending. Okay. Oh, and look, it's already flipping as I'm drawing this. Okay, I said 50. It's already retracing off of 47. Right. All right. Come on, 3 pips. Look, somebody's playing that. That's all it is. Someone might play this. Someone might play this. Someone might play this. Someone might play this. Someone might play the psych level. All of that is resistance, right? So I do stuff like this. I grab that one and I move it to the highest one. And that's where I want to sell if I'm a bear in a downtrend. It's Euro USD. Let's move on.com. See, I'd rather set up the... Let me just make one more comment. Yesterday, I said that you need to recognize that we're in a pivot cluster and there's a lot of risk associated with shorting. Now I'm much more comfortable shorting because we're through that. So you might have shorted yesterday and made money in here, but it was a higher it was a higher risk trade than I would feel comfortable with. The breakout retracement trade, that's the kind of stuff I like to do all day, every day. Okay, you see the difference? Because we've broken through the support. Where yesterday you would have made the short, possibly made money, possibly not with that type of price action, but you might have made money. But if you didn't see the risk, then you're not on the clue train as a trader. If you did see the risk and you took the trade anyways, you're a cowboy, and that's not good because you just ignored the risk. Well, do it at your own peril. Okay. So let's see what else is going on. Let's just do a quick around the world. British pound strong, euro weak, Swissy weak, Japanese yen moderate, dollar strong, Aussie strong, CAD strong, Kiwi strong. Correlation across the board, we got strong commodities. Mixed bag in Europe, and the dollar stronger than the yen. So what do you want to do? We had a good trade yesterday on Pig Dog, so let's go back to that one. We had a short the retracement trade. I think it was a midpoint psych level, and it came back to the 50 and it dropped. Where did I have that? Where was it? Yesterday? What time frame? Hour? Where was it? See, when you got 18 screens and over 100 charts open, you tend to forget which chart you did your analysis on. But yeah, I have like 100 charts going right now. So what was it? Oh, there it is. See, I see it now. All right. Okay. Retracement. Okay. Down off of the roll reversal stuff here. Right. Down. Now what? Take your resistance, or well, what used to be support, drag it across, should be future resistance. All right, is there anything else going on in there? Midpoint psych level, great. Right, so how do you do it? Let it retrace, sell it. Worked really nice. And the thing is, it was like on demand, like this is the London Open, right? So the market came up, tested it, boom, right down. It was really, really quick. The flip, there was some bad news. Paris, so I don't know if that's affecting European currencies and stuff. But anyways, it looked like it was heading straight down to that level. So straight enough trade. This might have knocked you up for a profit. Maybe you left your stop up here at break even and you're still in. Nonetheless, pretty tip trade. Very scary though because of the pivot clusters. Okay. But if you didn't have pivots, pretty simple where you take the midpoint psych level and you take the major psych level and you're just kind of working your way around. I had a request for Aussie dollar. Let's take a look at Aussie dog. Alpha dog. Where's my alpha dog? Ow. There it is. All right. Okay. Is the trend up or down? Come on, guys. I'll wait while I sip my coffee. Yeah, well, this one is a hard one to answer, right? Daniel says down, so it's kind of it's a little bit of a loaded question because this should be heading down to 75 in my humble opinion. Oops. I guess I should draw it over here. The 75 is where we're going. So shorting up here, real nice idea. But we're stuck on the psych level, right? So you see where we are now is 80.50, and just below this presumably is 80, right? So we're having trouble in there. And price action wise, where our resistance is here. Okay, so we're having trouble heading down. We've had a nice little opportunity. Hasn't done it yet. So, to me, I try selling off the top, but not as a trend trade, but as a range trade. But because my fundamental bias is down, I would jam my stop and make profit at the bottom of the range, which you normally would as a range trader, right? And as a range trader, you would follow the oscillators. So I would just you can see the oscillator setting up. It should be coming down if you're a bear. You got your resistance, and yesterday's low is now today. All this kind of stuff. I mean, you got the resistance you need, but I would trade it at a range. I wouldn't expect much. It wouldn't shock me if it did this. I would just jam the stop, take a walk, and the trade come down, retest the lowest low, and test 80. And that's where the real question would be, what do you do there? Because if you sold up here at 80.80, what do you do when you're down at 80? Do you take some of your profit? Do you let it break? Well, it depends on whether you want to be in a position or just pick up the 80 pips, which is a nice, it's a small swing. It's a pretty good spot trade. It's not a lot of pips. But what if you're heading down to 75? Okay. So if you sold up here at 81.50, which is the better trade because it's a higher fractal trade, then you're going at the 80 level if we do get that with 150 pips in your pocket, and you're like, yeah, I'll lock 50 in and let the rest run, go for 75. But if you only got 50 or 80 or something going into that, that'll be tough. And I don't think those are going to be easy pips either, because we haven't even tested this, and we're stuck in here. So, like I said, if it were me, I would trade it like a range with a longer term fundamental bias. Because of that, I would sell it off the top with the oscillator. I'd jam the stop. Okay. The vulnerable part is the market treats it as a lower high when we do that. But in that case, I still think we're going to fib. And the reason I think we would fib is because my fundamental bias is down, and my fundamental bias is based on the target given by Governor Stevens at the Reserve Bank of Australia. So as someone that is a fundamentalist that uses central banking policy, when the guy in charge of the value of the currency says it's worth 75, I tend to believe him. I'm a gullible poop. But generally speaking, even if this retraces up to 81, if my fundamental bias is down, I'm going to sell it high off of resistance. Why? Because that's my job. Right? But I'd rather it just fall now. But if it fails here, I take a small loss or break even one or the other, and I just try again at the higher level. Okay? What else? We did euro, right? We did pound. We did Aussie. We did oil. We did gold. We did the S&P 500. How else can I help? Moving pretty fast, I know. USD yen? Yeah, all right, that's fine. I mean, obviously, it's one that everyone watches. It's just not a lot going on right now. There we go. Come on, please type in what you want me to cover. I'll do my best to get it done. You're my boss. Tell me what you want. What do I get for $2? Anything you want. All right. What does this look like? Okay, I don't know if it was yesterday or the day before, but we talked about how to get into higher risk trades. So the question that bothers a lot of people always is, how do you get into a bullish trend that's bearish technically? A bullish fundamental trend in a market that's technically bearish. And we talked about this. If it wasn't yesterday, then it was the day before. We talked about how to use binary options properly. You know what? And I swear it was this USD yen, right? Because I remember switching it. So it was probably yesterday. I'm telling you. I think it was yesterday. It might have been the day before. All right. So where's my binary? All right. Let's throw that down. All right. So this is how you get into a fundamental bullish trend in a bearish technical market. Okay. Let me get rid of this little thing. And we had talked about a couple of things, and I believe it was yesterday, but you know what? I'm in front of my charts like 10, 12 hours a day. So my life's confusing. We had talked at some point about if you are in the weekly target. Now that's the weekly target for a bear, but it's green. Why would a bearish zone be green? Because that means up in the Western world, right? So we talked about if you hit your weekly target early in the week, you very often at some point later in the week touch the weekly central. Okay? Okay? So like you look here in this example, what, 3 weeks ago, we hit it on a, what is that, a Tuesday evening? Boom, touch the weekly central. Then last week, yeah, about a Tuesday, Wednesday kind of thing, whatever. It did come back touch it weekly. So we're kind of there, right? There's something there, but at the time, that's a 4-hour chart. At the time, the market was still very, very bearish, right? Because look at all of this stuff. You see how it came into the roll reversal, dropped down. But now we're at the weekly S2, weekly support 2, which is my biggest one that I like. In another video, we talked about one day we were through the weekly S2, and I don't even use the weekly S because it's very rare. Okay? But anyways, that's the open of the market. Just happens to be the low, right? So how do you get into that trade? You're like, I'm very interested in being long USD yen fundamentally, but everything about this is, you know, high, lower low, high, lower low. There's nothing technically bullish, nothing. But you're like, you know what? The psych level of 118, the fundamental trend, you want to be long, but how do you get into that trade? And that's how you use binaries properly. So you long the cash. Let's say, let's say with a 50 pip stop, and then you place a put on the USD yen here. Pick whatever time frame you want. Shouldn't matter too much if it's a longer term trade, right? A few hours, whatever, right? And if you're wrong in the cash market, so let's say you buy it here and then you hedge it with your binary option put, what happens is if cash drops, you lose your 50 pips, right? But you're going to make some money back, which lowers the cost of taking the shot. You see what I mean? So because you'd lose in the cash market, but you'd make money in the derivative market. It's not enough to cover it all, but you're reducing your risk by like 40%. Reducing your risk by 40% to give yourself an opportunity to win. And then in this case, you've won. So in the cash market now, what you do is you're kind of up in here and you're working your way up. So what I would do is at first, you're going to lose money on the binary. So you had a 50 pip stop, so you move your stop to break even, but you've lost 25 bucks on your binary, which let's say is equivalent to 25 pips in the cash. So now what you should do, now that you have your higher high up here, you should lock in 25 pips profit, which is your new break even. So let's say that puts you about here. So now your stop's here, which is your true break even, because now you got 25 pips profit here locked in, but it covers your 25 pip loss. So now you're jammed your stop at break even. You're in the longer term trend, and you're getting paid interest on top of that. Now, of course, interest these days is low, but it's still a proper carry trade strategy in which now you've locked your, you've covered your insurance, the cost of your insurance, and now you're in it to win it. And maybe if you catch this right, if you think this is going to 125, now you got the upside potential of, many hundreds of pips. And you took the opportunity and you lowered your risk at the whole same time. I swear we talked about this yesterday on this particular pair, and we talked about the binary, and there it is. It's actually worked. And we did it here, okay? So it's all just a matter of timing. That's the trick with trading, isn't it? But we only have 2 weekly pivots. One here to be concerned about. The other thing that's really nice is you can see, even under this circumstance, the market still traded the way it's supposed to based on price action. Okay? You got a support zone here. Past support becomes future resistance. We're down at the weekly. It comes back and then drops to the next level. And like I was saying before, that's the weekly S2. And that's the most important support pivot point that I use. It's more important than S1. And I rarely see S3 tested. And if so, I got a whole nother thing for that. Okay, because the market is really in an unusual mode. So I would trade that differently. One more? I got 3 or 4 minutes. Give me one more. Debisa says, isn't yen vulnerable seasonality? It seems like, yeah, but yes, there's a normal ebb and flow with the Japanese yen. Historically, it doesn't occur to like March. But in the last year, it happened early. But last year, it happened early because Japan was raising taxes. So investors had a choice, and in corporations and other Forex market participants other than traders, right? These large, let's say banks and multinational corporations, they had a choice. Pay lower taxes now or higher taxes later. Well, everyone wants to lower, so that's what kind of forced the wave of money coming back to Japan. The repatriation flows happened earlier than typical. Then they were supposed to jack up taxes again in 2015, but they realized that that was a total dumb idea. I mean, who was in charge of that one? Hey, let's do quantitative easing and then jack up taxes. Like they just kind of offset each other. And they realized, ooh, we almost killed the economy, like for the 9th time. I mean, that's the history of Japan, right? Do something to stabilize the economy and then raise interest rates way too early. I mean, they've done it multiple times over the last couple of decades they've lost. So they almost did another one. So they realized that was a bad move. They're putting that on hold. So therefore, we'll get some repatriation, but not like the big wave of money coming back to avoid higher taxes. Does that make sense to Bista? So we got to keep our eye on it, but still fundamentally, I still want this to go up. But that's why I say, like, even though I'm quite certain that I want to see this go up, it doesn't mean it has to do it here. I could still be doing the same strategy at 115. So how do I keep buying dips in a falling market and keep my risk tolerable? Well, that's why, a bit of hedging wouldn't hurt. Okay? That's how I would buy when I think the fundamental trend is up, but the technical market is down. Okay? And I look at this and it's still, right? I kind of see it like that is how I'm looking at it. Okay? That's kind of how I'm looking at it. So what my concern now is this kind of area. And if I was a bear, I would be getting ready to sell right there. The next one would be up here, okay? That's where I would sell if I was a bear. As a bull, I'm hoping for, right? And remember, hope is not a strategy. Hedging with a binary option would be a strategy. But, what I'm hoping for is this. And if I can take a shot by buying low, remember, if I can take a shot by buying low, oversold at not just one level of support, but multiple levels of support, so that I can enter a trade in the direction of my fundamental bias and then hedge it using derivatives, then, it's not that crazy of a trade, even if I'm wrong. Because there is a very reasonable chance that this heads lower, but I still want to take the shot if I can do it with reasonable risk, with a trade plan based on intelligent information ahead of time, right? It's not betting. Make sense? And I think we're spent for the day. So thank you for attending today's webinar. My name is Wayne McDonald. I'm the Chief FX Currency Strategist for Traders Way. I hope you enjoyed our strategy session for the 7th of January 2015. Remember, your ADP just came out at 241. Woohoo! 241 on ADP. It just came out 10 seconds ago. Very nice. That's a really good number. People are going to think non-farm payroll is going to work out really nice. Let's see the response here. Let's quickly go back to, I don't know, Euro USD. Okay. And guess what? Last month's ADP has been revised up from 208,000 all the way up to 227,000. Wow. So really good ADP number today. Double whammy in a good way, because you have last month was good, and now they're saying it's even better than we thought. And then this month was great. Okay. And remember, we were thinking about selling this up high around 50. Like I said, I'm sorry, it only went to 47. That's 50, and that's the first pivot, right? Sorry, it only went to 47. So peace on earth, may the pips be with you, may your profits be above average. And will I see you guys here tomorrow? Monday through Thursday, 7:30 in the morning, tradersway.com. Thank you, Ron. Thank you, Debista. Thank you, Ash. Thank you, Jim. Thank you, Dan. Thank you, Daniel. Thank you, Ernest. Everybody else. Right? Francis. Everybody. Cheers.